Thank you, Rocio, for joining me today. I'm super excited that you're here. And so, we met just a few weeks ago, and I was particularly interested in getting to know you more and learning about what you do and how you serve your clients, because I feel like we do have mutual client base. I work with small to medium-sized business owners in terms of in areas of frustration and stress. So strategy, time, team, money. It's only I come in as that trusted advisor. And so I want to just tell me more about what you do and why you got into that space.
Well, it was 20 years ago, and I started off in banking. I started off at Wells Fargo as a personal banker and just moved up, professional ladder. Realized that small businesses was something that I just connected with. I could really understand the whole ecosystem of the small business in their communities, the creation of jobs. A lot of small businesses went into operations out of need, others out of a strategic move. At the end of the day, they both get to a point where they're going to need capital, right? Whether you're bootstrapping or you're growing, you're expanding, very seldom do you have a business that can do it all on their own. So they have to find ways of accessing capital. Feel like I was gifted with a view of understanding life through numbers. So in my career as an SBA, I've done everything from overseeing lending teams to overseeing credit departments. So I really know what SBA lenders look for. And the decision that I took to become a broker was so that I can connect those two. So you have they have the clients that are out needing capital, different stages of their life. There's lenders that are willing to provide capital, but it has to be the right fit. And sometimes I would see small business owners come to, depending on the lending institution I was working for, and they just were not approved, not because they were a bad business owner, not because they weren't credit worthy. They just didn't fit that lender's appetite. That lender has a credit box that's developed based on where it sources its capital, the industry, the expertise of the credit department, what programs they're able to do. All these different factors determine what they can say yes or no to. So when these clients would come in looking for a loan and we turned them away, it was horrible. It wasn't because, we weren't the right fit. So I've worked for a few different lending institutions, everything from microloan lenders, nonprofit lenders, to large banks and fintechs. It's the same data that they're reviewing. It's just how they weigh it. So I feel like when I step in and I analyze the information for the clients just the way a lender would, then I can connect them to the right lender so that it's higher probability of getting approved, less headaches on both the lender and the client. And then through my consulting services, it's really geared around the financial well-being of the business. So when they come to me, we're not just getting information and submitting it to a lender. We're looking at financials and we're giving our clients our opinion, when we do our analysis, if their business is in line with industry standards. If we have a business that comes in and their cost of goods is a lot higher than what their competitor is paying, we realize it's not that the capital is the issue, but it's how they're operating. And so all of that additional information is part of our service. We're not going to be a one size fits all, but at least they can walk away with enough information that they make those strong or those strategic moves to grow their business. Sometimes they look for capital and they'll just willing to get anything at that time. They're in survival mode. Mm-hmm. And they end up getting capital that's so expensive, and the cost to stay afloat is not only the issue that they had at first, the reason that they had the cash flow crunch, but now they have to pay a much higher interest rate, and so it's not always helpful. And at the end of the day, it's making sure the businesses are successful, right? And capital, getting loans, is a strategic move for growth, expansion. So, wow. Yeah, 20 years. 20 years.
Yeah, thank you so much for sharing that. You hit a good point there where we talked about capital. Access to capital is usually one of the reasons why businesses go out of business. Yeah. Some business owners are bootstrapping it. Some of them are very loan averse. afraid to even take a loan for their business.
Yeah.
Or some are just not sure what to do or if they should, right? And so, but I think what underlies that is the fact that maybe they're afraid that it may ruin their credit, or they may not be able to pay it back, or they will get the fear of rejection.
Yeah.
Right. All of those maybe underline why they are resistant to seeking a loan. I'm maybe just afraid that the process is very cumbersome. Right.
It could be. It could be. There's a point where SBA and a lot of lenders might make it a little bit harder on some clients, right? There's some requirements that are SBA reasons that the documents are required, and then there's other times that the lenders have additional internal, or according to the internal credit policy, additional requirements. And so when the client comes in and doesn't understand the why all of this is being requested, it can be overwhelming. And so we try to, again, not only help them get the loan, but hopefully give them enough information so the next time that they need additional capital, that they're going to be ready and understand. And they feel more empowered to know when to request that loan, when it's really going to make sense for their business. Because when small business owners wait too long and they're looking for capital to survive, they already have the pressure of staying afloat, and they're depending on this loan to get them over a hump. And it happens. Every business has its ups and downs, and it's preparing for when those periods are going to be slow, that you might want to get the capital before, and being ready mentally and sometimes emotionally to go through that process. But it shouldn't be a negative thing. It shouldn't be a last resort, but instead, again, a strategy for growth. And sometimes it might make sense to use somebody else's capital and keep a little reserves for, when the unforeseen happens. So
that makes a whole lot of sense, Rocio. So what are the common mistakes that you find the business owners make when trying to source for capital?
There's a lot of ways of accessing capital. If somebody wants to get a loan, there is possibly a lender out there that's willing to give them the loan. It's when they don't understand the cost to borrow. If they get the loan, how much is it truly going to cost? They might get it within 24 hours, but is the interest rate 36%? Or can they go a different route where it might take a week or two and they get it at 16%? Or even a third route where a lender comes in and does a full analysis, and then the cost to borrow is smaller, because the lenders, what they're measuring is the risk, the probability of repayment. So the quicker they underwrite it, the quicker they move the application, the less analysis many times that's happening. And so the risk is higher, right? They're willing to say yes, taking on additional risk. Well, that risk is going to be paid by the lender, by the borrower, through interest rates. So not really understanding, if I were to pull from a credit card compared to if I were to use the line of credit, or if I were to get a term loan, what type of loan. So that's typically one of the big mishaps, and they come when they have high interest rates and we have to refinance them. And really understanding their financials, understanding what they're telling the lender when they provide their tax returns and their interims, like their P&L and balance sheet. So reviewing it before, so they have a clear understanding of what those financials are stating. And sometimes financials don't explain the whole picture. So being prepared to answer questions, or providing the information so that the lender understands why there's a dip or why there's something unusual on those documents, right? It happens. I've had clients that are seasonal, and their cycle is 2 years. It's a 2-year cycle. So if they're in between their cycle and it's the end of year 1, and they provide financials at that time, it's going to look like their business is taking a huge dip. But if they come and explain to the lender, look, I'm going to give you 2 more years of tax returns so you can see my business cycle. I had a client that did marketing for political campaigns. Well, it's every 2 years, and presidential's every 4. So depending on when he was looking for capital, it looked like his business was either doing really well or it was doing really bad. But knowing how to present that to the lender, how to give that additional information, because they're going to see it. You really can't hide much, especially if it's a full-blown application. You have to be ready to be transparent. And the more transparent you are, the easier it is for that lender to underwrite their loan, because most lenders are in business to lend. Most lenders are there to say yes, but they have to understand the business. And they're great. They might be great at underwriting. They might be great in when it comes to the banking services, but they might not be experts in every single industry, where the small business owner typically is. They're an expert in one industry, and that's why they have that type of business. So they need to come in with their experience and explain to the lender how their business operates.
So that's very well. Really understanding the cost of the loan,
Yes.
and then their financials, and understanding and being able to present their case. Like most businesses, you talked about the business like the circle. It's cyclical, there's ebbs and flows, right? And so there are times where things are not as good there, and there's seasons where it's great. Being able to explain that to the lender is key. Great. So I love those answers, because I think that helps people think about that preparedness for a loan, for preparing for a loan, getting prepared for it. All right. You talked about interest rates as well. I think when understanding the cost of the loan, like really understanding, like if you're getting a loan very quickly, the risk, the lender is probably taking on more risk with you. And so understanding that, the interest rate, you may be paying quite a hefty interest rate if that loan is underwritten too quickly, right?
Right. With less information. Yeah.
With less information, understanding that. Okay. So I guess working with somebody like you, it's critical to helping them understand the nuances there, right? Especially with this low, especially with the interest rates, and understanding that, I believe. What would you say would be, and I think you hinted on this earlier too, about that they may not necessarily always need a loan, right? That you're looking at the entire business, what's going on operationally for the business, and helping them identify areas where they could maybe put in some efficiencies that may actually negate the fact that they need a loan.
Right.
Right. So are there other alternatives? I know that's one way to look at it, but are there other ways of funding other than getting a loan?
Yeah, there's different ways that people have been able to access capital for business. There's friends and families that believe in someone enough that they will gift money to that person. With my SBA loan packages, there have been times when we have started a business and they need to have equity injection. We have a family or friend, typically a family member, that really believes in the business, and they will gift them a certain dollar amount. Crowdfunding was pretty hot and heavy for a bit there. Haven't really seen much. There's always equity, like investors that can come in and get, depending on the type of structure, put capital in either for equity or, and then sometimes when you have a business, like a business acquisition, somebody selling a business to another person, that seller could carry a note. They can do a seller carry note as well to provide some of the capital to do the transition, the transfer of ownership. So outside of lending, that's typically what I see a lot as sources of an injection. If somebody has a retirement account, there's ways that they can roll that in without it being penalized. If it goes straight into a certain entity structure that then puts it into the business. So again, accessing it just depends on that situation. It depends on the owner and what resources they have.
Okay. All right. So there are alternatives to just looking for a loan. And would you recommend that they actually explore those, like with family and friends first, or it's is at least putting in an application for a loan way ahead of time prudent for them? What would you recommend?
Yeah, without really understanding their financial picture, it's really hard to give a recommendation. It varies. It really varies case by case. So first and foremost is understanding their financial situation, the business situation, how the business is performing, what the capital is going to be used for, what's going to be the return on that investment. And then based on that, they can make a more, I would say, a more informed decision on which way they can move forward with their plans that can be the most cost effective.
Okay. So great. What in your 20 years experience, what are the challenges that you've seen small business owners who've actually come looking for loans? I may have asked this question in a different way before, but I'm just really curious what pain points they come with.
Yeah. Well, one of the things that is sometimes eye-opening for some clients, especially if it's their first loan, right? If it's their first business loan, is that many times as a business owner, they need to personally guarantee the loan. The borrower is the business, right? How the business operates is the first source of repayment. Most lenders are going to look at the owners as a second source of repayment. So if they have an outside source of income, if they have savings, if they have a spouse that can also be on the loan as a source of repayment, that can help reduce the risk of the loan and get that client to say, get the lender to say yes a lot easier than without those additional sources of income to repay back the loan. So while the business is the borrower and the lenders are looking at the business as the primary source of repayment, there could be other factors, other ways that business owner can present their request so that they get approved and they can get a much lower interest rate, right? So they're going to be required to be a personal guarantor. Adding additional personal guarantors that are strong can help. Collateral is one of the areas that the lenders look for. So we have the 5 C's of credit. Collateral, it depends on the lender, depends on the loan program. But many times if we have collateral, again, that reduces the risk. And so the client needs to come in ready to, again, be transparent with their resources. The lender wants to provide the loan. The last thing the lender wants is a loan to default. The last thing they want is to go out and liquidate assets, because the lenders are going to get pennies on the dollar if they go that route. They want to give a loan to somebody that's going to be able to repay it. And if the business cannot support it, if the business historically cannot show that it can carry that size loan, that's where other options can be taken into consideration. Still gets the applicant to get the funds until they get to a position where the business can stand on its own. The loan is not the only solution for my clients. Sometimes it's getting that business coach to come in and help in other ways.
Right.
Yeah. So I would love to learn more about the services that you offer and how they can complement some of the solutions that I'm giving my clients.
So thank you so much for this time. I think this information is so valuable.
Thank you.
This time already. A lot of things to really think about that can be shared. Yes.
Love it. All right.
All right. Good talking with you, Rocio. Okay.
Okay.
Thank you. Bye-bye.